I've got my whole community on red alert. Mario, you might remember, just dealing with this question, Ref Silver specifically, that we had a moment where I said there could be one more rejection at the 50 range. We talked about once, twice, three times a lady. I use these metaphors so that people remember you say something. It's easier to remember that. It was a line out of a Lionel Richie song. Not that I was a fan, but anyway. We went up to 54 and we pulled back down to 47, and I don't think you have much of a big dip, but I was expecting some form of a technical rejection. At the time it was moving very strongly and you thought it would continue, and that was our only point of difference. Now we've had that rejection that went with the gold, which is why we also met our platinum target. So we're actually looking to exploit the failure of the fiat debt system by trading as well as investing. And you need to be careful when you trade. And it's not necessarily for everyone, but we have real method with regards to doing that. And it's our overall opinion. And it's something I don't stop like a flea in the ear of my community saying, you are not missing the silver move. You are not missing the silver move. We've had now the rejection. And if I can just go again to the charts, and I think the supply story, because the question is actually a fundamental one, not a technical one.
I just wanted to ask you quickly, because someone gave a super chat and he wants thoughts on platinum as well. So maybe you could look at platinum.
So I'll do both in one go and then I'll hand back and then you go to Clive, please. But this wick could literally be that it doesn't need to be a big rejection because of the fundamentals of the supply being so rattled. It's not something you paper over. That's another point, just by the way, on supply. So much of silver production is incidental secondary product. You don't have pure mines that you can just say, hey, can you open up that other shaft that you've already dug and all of that and just start pumping it out now that prices are better? No, you don't. You're relying on gold, zinc, copper miners who actually stumble on silver where there's a reasonable percentage of it. And because they've already expended all the energy in digging the ground for the primary copper, gold, or zinc, you get a disproportionately low cost attachment to the secondary silver that is attached. And it's part of their revenue as a copper miner. And if you're not stumbling into secondary product, it's not going to happen. And it's very difficult to forecast that. If you're digging a hole in the ground because of copper content, for which anything else you find is secondary. So that's a supply matter also to add on to the deficit in the LBMA. But this third run here, we've had on the smaller timeframes, we've had that rejection from 54 down to 47. And when we look at this on a smaller time frame, it's our take, you're going to the 90s, you'll probably have a pause just below the 3 digits and then 330. And we've done that draw before. And the key reason I bring this chart that many people have seen before is that I actually think this is that third rejection and the lady is coming very shortly. So I've dropped from the big macro view time frame just to bring it to the here and now. And I'll highlight that Fridays are often Mr. Slammy days, and the day traded quite hard to the downside and then subsequently wasn't being held all the way to the downside and retreated most of the way back up. We'll have a Sunday open, of course, coming not too far off from now. And I would suggest you're not very far away from this structure. And that's what my community guys are having me be in their bonnet about, because the breaking of this continuation structure is your lady that I was talking about when you said we're through and we're off to the races. I said we're going to get a little nudge back one more time. That's the technical aspect. And now I'm where you were last time when we were at 54. You don't want to miss this. So that's the silver. Very quickly, platinum, because I've been greedy. Let me just also say here, platinum, we made a very key level on platinum, which is another reason why we
just want to thank Oro Lobo for the super chat. He's the guy who asked about platinum, and he also asked about Trump's $2,000 stimulus. We'll come to that in a minute, but let's look at platinum. And I've seen the other super chats were coming for that too. So platinum, I don't follow platinum too closely. I think Clive does though.
I do, and I love it. And I think it's cheap gold. and it's even more tightly supplied than silver, in my opinion. And this was the big move. We were in sub 1,000 down here, and this is the big move. And you ran a target, and that's why I think the whole precious metals category ran a target, because they're all correlated. And when you get a technical setup on the one, that's point. This was a big weekly upside HVF method setup. That's your target 1621. You get that pullback and rest. We've now had that. If we get silver starting to run and gold is the king, we do need gold to run if silver's to run, but it doesn't need to run much. It just has to not be falling badly for the others to be unleashed. So I think this is as far back as we pull, and I think we'll start to see a bid coming back into platinum in the not too distant future. So don't miss the silver move. Don't miss the platinum move. We just need gold to be okay. And gold finished the day pretty well on yesterday. So yeah, let me finish there.
You know, I've been saying for years that the fiat monetary system is on its last legs. And every week something new happens that just confirms it even more. And I want to talk to all of you today because my whole community, and you know who you are, is already on red alert. We've been watching silver, watching gold, watching platinum, watching the bond market, watching the central banks, and it feels like the moment we've been preparing for is unfolding in real time. And yes, I remember that conversation about silver and the once, twice, 3 times a lady rejection. People laugh when I say stuff like that. Mario, what's with the Lionel Richie references today? Well, I'm not even a fan, but it helps people remember it. Sometimes a silly metaphor saves a lot of money. And that rejection happened exactly the way we talked about. Silver went up to $54, then pulled back to $47. Some people panicked. Some people thought the move was over. But no, this is what markets do when the underlying fundamentals are explosive. They pause, they cool down, they take a breath, but the structure remains intact. What matters is the fundamentals, and the fundamentals here are more bullish than anything I've seen in precious metals since the late 1970s. The supply situation in silver is not something you can paper over. And that's the key phrase, paper over. That's exactly what the LBMA and COMEX have been doing for years, pushing paper silver to disguise the fact that the real metal is disappearing. And those of you who still underestimate the supply problem, let me remind you, most silver is not mined as silver. It's a secondary byproduct. You don't have a bunch of miners sitting around saying, "Oh, silver is up, quick, open that other silver shaft we prepared just in case." No, it doesn't work that way. You're relying on gold miners, copper miners, zinc miners who incidentally find silver. And if they don't find it, the supply doesn't magically appear. This is why the silver market looks nothing like the gold market. You can forecast gold supply, not perfectly, but better. You can't forecast silver supply. You can't suddenly produce more. You can't increase production on command. And the LBMA knows this. They've had structural deficits for years. They paper over it with unallocated silver accounts and synthetic exposures. But you can only do that until someone calls your bluff. And the move from 47 back toward 54 isn't just a technical retest. It's the beginning of the lady arriving, the breakout we've all been waiting for. And when you zoom out, it becomes even clearer. On the big macro timeframes, silver has been forming this massive coiling structure, and these pauses, these pullbacks, are exactly what you want to see before an explosive upside continuation. This last rejection was the final test, and now we're back at the point where, if you blink, you'll miss the breakout. And let me remind you, Fridays are often Mr. Slammy days. The big boys love to push prices down before the weekend, scare the weak hands, cover positions, and then come back on Monday ready for the next leg up. But this Friday wasn't a true slam. They tried to push silver down, and it just didn't stay down. It retreated almost entirely back up. That's not a sign of weakness. That's a sign of market exhaustion on the part of the shorts. And as we move towards the Sunday open, I'm telling you, we are not far away from breaking out of this structure. Not far at all. And that's why I've been a bee in the bonnet of everyone in my community. You are not missing the silver move. You're not missing it. Not this time. We've waited too long. We've studied too many charts. We've seen too much evidence. You don't miss the monetary reset by sleeping through the most powerful move in silver since 1979. But let's step out of the charts and talk about something even more important: the fundamentals behind this move. The fiat debt system is failing. It's not coming. It's not a risk. It's failing right now. The debt levels are exploding. The interest expense on the US national debt is now higher than the defense budget. Japan is in a black hole of debt. Europe is in stagflation. And central banks all over the world are buying gold. Not ETFs, not paper claims, but physical gold. You know why? Because gold is nobody's liability. It's the only real money left in a world drowning in IOUs. And when gold goes, silver follows. It always has. It always will. Silver is the high beta cousin, the metal that moves twice as fast as gold in monetary crises. It is the fuse that lights when confidence collapses. Now, before we go back deeper into silver's next move, someone in the chat asked about platinum. Thanks to Oro Lobo for the super chat. So let's talk about platinum for a moment, because platinum is another metal that people are sleeping on. I always say, if you want cheap gold, you buy platinum. Simple as that. Platinum is not only historically undervalued compared to gold, it's also in far tighter supply than most people realize. And the charts confirm this. Platinum was below $1,000 not long ago. That was an absolute steal. Then it ran a big technical target, the 1,621 level, and then it pulled back. That pullback is healthy. It resets the structure. Now, if silver starts running, properly running, platinum will not sit aside. And someone needs to understand this. Platinum and silver are cousins in tight supply markets. Silver is the monetary alarm bell. Platinum is the forgotten prince. If gold is the king, platinum is the royal cousin. People ignore until suddenly it's outperforming everything. So don't miss platinum. Don't miss silver. Don't miss any of the precious metals category, because they are all correlated. They are all responding to the same underlying monetary crisis. But let me bring it back to silver now, because this is where everything intersects. Technicals, fundamentals, supply, macro forces, and geopolitical risk. Let's talk about the supply chain again, because we need to hammer this home. Silver is not a market where higher prices create higher supply. The supply is constrained by geology and by the business models of primary mines. And since most silver is mined as a secondary product, meaning the mine's profitability is driven not by silver, but by copper or gold or zinc, the silver supply doesn't respond to price the way textbooks think it should. In other words, the silver market is almost perfectly engineered for sudden, violent upside moves when demand spikes. You don't have the luxury of saying, well, silver is up, so the miners will produce more. No, they won't. They can't. And that's why the LBMA and COMEX are terrified. That's why they're sitting on record low inventories. That's why we've had backwardation in silver. And that's why you cannot paper over the deficits anymore. And look at what's happening in the macro environment. The US is printing money at the fastest pace since the pandemic. Europe is stuck between deflation and inflation. Japan is stepping into yield curve control again, even if they pretend they aren't. China is quietly accumulating metals and dumping treasuries. Everyone is positioning for the same thing, a global monetary restructuring. And silver isn't just money, it's industrial. It's in every solar panel, every EV, every 5G tower, every battery system, every military technology that's emerging. It's not a luxury. It's an essential component of the entire technological framework of the next decade.